Hey everyone, thanks for jumping back into the cryptoverse. Today we're going to be taking a tour of macro level Bitcoin charts. So we're going to be looking at a small subset of the charts that I've put together for Bitcoin. If you guys like this content, please subscribe to the channel and turn your notifications on and like the video. And if you're not sure how to turn your notifications on, then just click the bell next to the subscribe button. And also feel free to join the Telegram and Discord channels in the description below and follow me on Twitter. I know the Telegram channel has grown to around 1,600 members, so there's definitely a lot of talk going on in there about some of the charts I'm making, and other people are discussing other ideas as well. So let's go ahead and jump in. So again, we're talking about Bitcoin, and we're basically going to be going over these charts that you see here. So the first one is this market cycle bottom to peak ROI. So ROI is return on investment. So the idea is if you bought at the bottom of every market cycle, what would your peak ROI have been? And you can see, each one is more or less taking longer to reach. Now, there's going to be critics out there that say that you could draw these as part of the same cycle. Namely, most people would argue, or most people that say would disagree with this would argue that this orange line should just be added to the blue line, which would take that market cycle bottom to peak ROI of around 10 to the 4 or 10,000x. Remember, these are logarithmic scales, and I've explained these before. 10 to the 0 is 1, 10 to the 1 is 10, 10 to the 2 is 100. And then the first line here, this first tick mark, if this is 1, then this would be 2, and then 3, 4, 5, 6, 7, 8, 9, 10. Then this would be 20, 30, 40, 50, all the way up to 100. And this would be 200, 300, 400, all the way up to 1,000. So that's how logarithmic scales work. Now, we're going to go ahead and operate on the assumption that we are in a fourth market cycle. And we're plotting, this first bull run back in, the 2011, 2012 time period as this first cycle. And then we have our second cycle, our third cycle, the yellow line. So the third cycle, many people here are very familiar with. This was when we went from the bottom in 2014 up to the peak in late 2017. And then many people experienced this painful bear market. But definitely smart money was getting out before we entered this bear market. And we've also drawn on here this fourth market cycle, a theoretical market cycle, because we actually haven't experienced a market cycle peak commensurate with what we've seen before. Now, anyways, you can see that if we are indeed starting, our fourth market cycle, well, I shouldn't even say starting because we're already over 400 days in. But what it would mean is that we're just getting the party started in terms of where the current bull run, if it is a bull run, where it might take us. And you can see that each market cycle takes longer and longer to peak, and that the peak from market cycle bottom is getting lower and lower. So again, we're seeing diminishing returns, and the time to see those diminishing returns is increasing. Now, this is daily data, so of course it's not exactly accurate, because there could have been, there could have been wicks in the price that went up higher, which would cause some small discrepancies in what you might see in the ROI. But it's more or less correct, at least on a daily time frame. So where might we be headed, assuming that the theory is, or our hypothesis is that market cycle ROI from market cycle bottom is getting lower and it's taking longer to reach. If it were to do something, continuing this trend, then maybe we would see something like this. And it doesn't have to be out here after the 1,400-day mark. It could be at the 1,200-day mark, or it could be at the 1,600-day mark where we peak. We don't exactly know where we're going to peak, but I think it's probably safe to say that it's going to take longer than at least the last market cycle, which peaked at almost 1,100 days after the market cycle bottom. So just keep this in mind. And if our returns were indeed to continue to decrease, then maybe we would see something like a 30 to 40x from market cycle bottom, which would end up putting us at around 6 figures. So remember, the market cycle bottom is around 3,100 or so. So if you were to see like a 40x ROI, then that would put Bitcoin at around $120,000 at the next hypothetical peak. So just keep this in mind. If Bitcoin, if you blink and Bitcoin is at $100,000 in a couple years, and you think it's going to a million or even higher, then just try to keep yourself grounded. Think back to where we were in, say, 2020, and remember how far we would have come to get to that point, and don't become delusional and then become the dumb money at that time, because there's going to be a ton of dumb money coming in if that were to occur. And if you're in the markets now, and if you've been buying recently throughout 2019, then we're hoping that this is the smart money coming into the market in preparation for dumb money coming in 2 or 3 years. So again, even though there's been a lot of positive moves in the market recently, at least according to historical patterns, the party is just getting started. Now, that doesn't mean that price can't go down. Obviously, price could go down in the short term. But again, these are macro level charts. So one of the favorite charts that I make is this risk chart on Bitcoin. So basically, it's a risk metric that I made, and it accounts for diminishing returns and lengthening cycles. So if it didn't account for that, then we would never continue to see these red points in the risk. So essentially, the risk goes from 0 to 1, and when the risk is in the dark blue or close to 0, then it's historically the lowest level of risk, and when it's dark red, it's the highest level of risk. So it's hard to just use a single metric to identify this, because as the market matures, returns will diminish. So we have to account for that, and we've done that. And you can see that historically, buying when we're in this dark blue region is always a good time historically to buy. And even potentially, I've argued about, I've argued in a sense, if you want to be, say, a moderate level risk taker in Bitcoin, so you've already accepted the incredible risk of even being in cryptocurrency. And then if you want to try to determine what your risk is when you're buying Bitcoin, you can use this chart. So currently the risk is around 0.45. And I've argued before that if you're a moderate risk taker, then you should not be buying Bitcoin above risks of 0.5. For those people who are more aggressive in their risk taking, then maybe you would even buy all the way up to risks of 0.6 or 0.7. And in fact, in a year like 2016 and 2017, it would have served you well, but you would have just been strongly gambling on these short-term continued irrational bubble phase. The smart money is getting in back during these accumulation phases, not when we're running up. And again, if you were buying at 0.6 and 0.7, then that means in 2019 you were also buying in this region and not taking any profits. So again, that's why I say if you're a moderate level risk taker, then I would cut off your buying at 0.5. Not that this is financial advice. This is just how I manage my own portfolio. I would cut off your buying, your Bitcoin buys at around 0.5. And if you are buying Bitcoin, then hopefully you're putting it primarily into the market, or you're buying Bitcoin when the risk is lower, because you might say, well, I could have continued buying all the way up and all the way up, but it's really hard to identify at what point do you stop buying, and then turn your mind around and start selling and start dollar cost averaging your sells. So even according to this moderate strategy, we are still slightly in the buy region. So if you are dollar cost averaging your buys, I would also say you should be dynamically dollar cost averaging your buys, so that the amount of Bitcoin you're buying now hopefully pales in comparison to what you were buying when the risk was, say, 0.2 or even say 0.3, because you want to get that lowest price point entry, like the lowest entry average buy-in that you can. Now, a lot of people are probably saying, well, it's easy. Hindsight, when you're able to look back, it's easy to make a metric that looks at historical data and attempts to make sense of it. But what could it look like in the future? And we've talked about how do we validate this risk model. So what I did was I fed in some, basically some dummy price data. So basically, taking this point over here and just, feeding in data for the next several years as to some hypothetical situation that could occur that the only thing I can guarantee about this curve is that it won't, happen exactly like this. In fact, it already hasn't because I made this a few weeks ago, and already the price is slightly different, plus or minus $1,000. But again, what's a few K among friends? So if we do, print something like this price run up, then you can see that the gains that we might have moving through 2020 and 2021, while they could be impressive, they might not be as significant as what might occur, say, in 2022. And this is obviously going to disagree with a lot of people's idea in terms of the 4-year market cycle. And I can assure you, I have not fully discounted the possibility of a 4-year market cycle. If that were to occur, then we would just expect this to run up sooner. Say the end of 2021, maybe earlier 2022. But going along with the theory of a lengthening market cycle, maybe we would see something like this, where we see a peak out in, say, the end of 2022 or sometime around that time frame. Now, even though the ROI is diminishing, because you can even see from peak to peak. Here we're going from 1,000 to 20,000, so that was a 20x. But then from here to this next price point, it's only like, say, like a 6x or so. Yeah, the risk metric still predicts this, red cell zone, essentially. So basically saying this is where you should be selling. And my apologies that you can't really see the numbers on this chart, but it just goes from 0 to 1 again. So hopefully we can use this to our advantage and manage our portfolios accordingly. And again, if I do post updates on risk metrics to my YouTube, every so often. But if you want to get risk updates like every day or every other day, then just check out the Patreon channel in the description below. And I provide fairly frequent updates on the risk for Bitcoin, Ethereum, Litecoin, and XRP. So if any of those are part of your portfolio and you want to stay up to date on where they are, then check out the Patreon. And I will be making more risk metrics and talking about them for other coins. Now, here is this primary logarithmic regression band for Bitcoin, and we've said that this is fit to non-bubble data. So it was fit to this data, and this data, and finally this data over here back in 2019. It was not fit to this data, yet it still, basically predicted the line at which we bounced off of. Now we're coming back up to the top of this region. Now, the idea behind this primary regression band is to note that historically, if you're buying in this band, then it's historically a great time to buy. If you're buying outside of the band, like, for instance, up here, then you're probably doing something wrong. You're probably just seeing it on the news and you're just FOMOing into the market. You are the dumb money. You're the reason other people are making a lot of money. So the idea is that, if you enter the cryptocurrency market and you're a new person in the market, you're most likely going to get fooled the first market cycle around, and then you either capitulate and you don't think about Bitcoin again until the next market cycle peak where you FOMO in again, or you learn your lesson and you become the smart money and you're selling to the dumb money at the market cycle peaks. So the idea is anytime we're in the band, it's probably a good time to buy Bitcoin. Anytime we're out of the band, it's probably a bad time to buy Bitcoin. And you can note that it more or less corresponds to my risk metric, because if you go back to the risk metric, you can see when we popped up above this risk level here of about 0.6, maybe a little bit higher, it would have corresponded to a sell for the moderate investor. And again, here we are popping. This corresponded to popping out of this band. So it would have been saying, okay, don't sell everything because there's always a chance we keep going up, but maybe sell 10% or, sell a small portion, take the profits. If Bitcoin continues moving up, then you can sell more. And if it goes back down, then you can reinvest what you sold. Now consider your short-term capital gains tax on that as well when you make that decision, but it's just something to take into consideration. So again, we are bouncing back up, and it looks like we might be starting to go back above this primary regression band, and with the risk around 0.45, we're getting close to the point where you seriously might want to consider to start toning down those Bitcoin buys. So just keep that in mind. We also like to show it on a log scale, so not only showing price on a log scale, but showing time on a log scale. And you can basically see this linear band on this scale, and noting again that we are, it's the same data as the previous chart, but it's just shown differently. I think some people like to see it, like to see those nice straight lines as opposed to those parabolic, or not parabolic, but logarithmic regression curves. So this is just another chart I wanted to provide an update on. And again, you can see we're continuing to move up this curve, and hopefully, if we were to, I don't actually have it in this presentation, but if we were to continue this out, we're expecting to get to $100,000 sometime in the next 2 or 3 years. So I like to put this chart in every once in a while just because I like to trick you into listening to a little bit of calculus. So if you're not familiar with calculus, this is Calc 101. So if you did take calculus, this is not going to be over anyone's head. This is just taking the time derivative of the 50-week moving average and dividing by price. So this is the 50-week moving average, this red line. And the white line is the time derivative of it divided by price. And the reason we divide by price is it's not actually very relevant for this presentation, but the reason I do it is because I can compare other time derivative moving averages against each other by taking out the price. But here it doesn't really serve a huge purpose, but it doesn't really affect anything either way. The point is when we are below zero, that means the 50-week moving average is decreasing. So here you can see this is the derivative. When we go below zero, the 50-week moving average decreasing. Again, here it goes below zero, 50-week moving average decreasing. When it goes above zero, the 50-week moving average is increasing every time. When this goes from negative to positive, you can see there's a shift in the slope going from negative to positive. So the point of this chart is to note, and I did publish this chart, many months ago. If you go back on my YouTube channel, and also if you read Bitcoin Letters, which was a 21-page report I released last month on Bitcoin, I'll link that at the end of the video. But we talked about this idea that, historically, every time we had a bull run, once the 50-week moving average went from negative to positive, it did not go negative again until the next bear market, which was after a next market cycle peak. And again, that has remained true even to now. The 50-week moving average is still going up, and as long as the price remains healthy and keeps moving up, the 50-week moving average will continue to move up. Now, if the price of Bitcoin were to drop to, say, $7,000 tomorrow, the 50-week moving average is still going to be going up because it's taking into account daily data for almost the last year. So again, this is about macro level moves. These charts are not meant for day trading. They are meant for people, who have 9-to-5 jobs. We have, there's other things in life that we are spending our time on. But I mean, to be completely honest, I'm spending most of my free time working on this stuff at this point, just because it seems like a lot of people enjoy it. But again, these are macro level moves to identify, momentum shifts in the market, and seeing this go from negative to positive. Historically has been a good thing, and you can see once it's positive, it then stays positive for a number of years. And if we repeat past market trends, then we are going to stay positive in terms of the time derivative is going to stay positive and moving up for the next couple years. Now we'll see if that actually happens, but that's just what the historical data suggests. So here's the same thing, but with the 100-week moving average. The last time I talked about this chart, we had not crossed this zero threshold, but actually currently we have. We've seen a change in slope of the 100-week moving average. So instead of continuing to go down, it's starting to move back up. And again, if we were to repeat the past market cycle, it could just be that we are just getting started in terms of seeing this turnaround. So you can see we kind of come down, circle back up or loop back up, back down, and then back up. So hopefully we're headed out this direction for the next, or at least for the foreseeable future. So, that's only a small subset of the charts I do make. I like to publish ones very frequently. If you guys have been following the YouTube channel, you know that I come out with a new video almost every single day for various coins. If you guys like the type of content I produce, want to see more of it, want more access to say, hey, I want to see an update on this chart, can you please give it to me, or where are we at risk, or get my opinions on certain things, then just check out my Patreon channel, and there are a number of perks. So for the $30 a month tier, you'll get a subscription to Bitcoin Letters, which is a 21-page report. Let me go ahead and pull that up for everyone so you can see what it looks like. But we also have a patron-only chat room and patron-only updates. And these updates include like risk updates and stuff like that. The $50 a month will get a subscription to Ethereum Letters, which is coming out in about a week, and altcoin letters, which will come out in March. These are going to be intensive reports with charts very similar to what you're seeing in the videos, but also going above and beyond, showing you new charts, showing you analysis about the charts I don't talk about in the videos, and of course everything in this tier. And then this last tier is not really going to be for most people, but you do get early access to YouTube videos. Normally I have several sitting in the queue for a couple days before they go live, and then you'll get, basically one-on-one correspondence with me regarding, all these analytical data science models, etc. So if you guys want to see what Bitcoin Letters looks like, so this first report I published back in January, and it was free. Anyone can go see it. Just go to intothecryptoverse.com and you can go download their report. You can just download it here. But here it is, and you can see it's a fairly intensive report with all sorts of charts and analysis, and it's a very long chart, or a very long report, which is why I'm just quickly going through it. But you get the idea. It's intensive analysis that I spent a long time doing. I have gotten some questions about my background before, because I feel like some people are a little hesitant. They're like, okay, well, what is this guy's background? So I do have a PhD in engineering. It's not in finance, so I'm not a financial advisor by any means. I just try to look at historical trends and try to inform my future decisions. So, and I also did get a question about this right here. So this sign that you can see is it says shuttle crossing. I actually have a lot of, they're all around like basically shuttle pictures from NASA. So I used to work at NASA, Johnson Space Center, when I was an undergrad. So I did an internship there in their undergraduate student research program. So a little bit about my history. But anyways, I hope this is informative for everyone. Check out patreon.com/intothecryptoverse if you wanna dive in further and you want more updates. You really want to be prepared for what's coming in the next few years, and I would suggest check that out. But again, I think I hope this update is informative for everyone. And if you guys like the stuff, like the content, please subscribe to the channel, follow me on Twitter, and check out my Telegram channel and Discord. The Discord channel isn't really nearly as active as Telegram. I think Telegram has around 4 or 5 times the amount of members. But Discord, Discord is a nice area because I have all sorts of channels there, or channels within the Discord channel that show like all the different coins I'm analyzing, and the videos go in each respective channel for that coin. So it's kind of nicely organized by one of the community members named CB. So anyways, he's also in the Telegram channel if you if you see him around there. He's doing a really great job keeping the Discord channel somewhat organized. So anyways, check out the Telegram channel, follow me on Twitter, check out Discord. I also have a Reddit, a subreddit, if you want to check that out. All these things are in the description below. But again, I think that'll wrap it up for this video, and until next time, bye.